and as we can see, they're pretty high compared to all the peers in the emerging market and Asia Pac space, apart from South Africa, Brazil, and Turkey, which have primarily the yields are higher because of pressure on their currencies due to their domestic political issues that they are facing, which is accentuating the pressure on their currencies, which which is making their central banks take cognizance of the fact, and they have continually seen rate hikes, and their yields are much higher. But since this new government has come in India since 2014, we have seen a relatively stable political environment, very stable policies, which provides continuity to the economic growth that we are seeing, and it also provides a lot of stability to the macro environment. So in terms of absolute yields, India is a little higher, and I'm going to talk about why Indian yields are higher at this point in time. Because of a few factors that I'm going to talk about in the next 3-4 slides.
Okay.
Okay. Primarily, it's going to be more about how this market is much more attractive than other relatively unstable political regimes that they have, like South Africa, Brazil, and Turkey.
Okay.
Okay. So the next 4 slides basically, I'll tell you how the flow will go. The first slide gives a snapshot of all the macros that we have, which are relevant to the bond market. And then I'm going to touch upon 3 major factors in the next 3 slides, which are the CPI, fiscal, and current account deficit. Along with current account deficit, I'm going to talk about oil. So the first, this third slide, which is the macro fundamental, is to give a fair bit of an idea of what currently where India current macro stands, and how things have been continually improving with this new political regime that we have from 2014 onwards, and how things have improved. So first we can see the big problem of current account deficit that was there in 2011 to 2013, where it had touched as high as 4.8%, has been continuously coming down and is now at 2.2%. Fiscal deficit, which used to be close to 5%, and corrective fiscal deficit, which states used to be around 9%, has been brought down to 3.3% by this regime. Growth has been continuously steady and going up, even in a challenging macro environment globally. Inflation has been contained through collective efforts of government as well as Central Bank of India. And with prudent food management of India, the government has been able to contain food inflation, with farm productivity improving, and all the investments that the government has put in the farm sector has reaped benefits, and the inflation has continuously come down, and this 4.9% is with a very low base of last year, where we averaged around 3.3% CPI inflation through the year. So we believe that this 4.9 will also be going down from August onwards. Forex reserves, RBI has been very prudent in garnering forex reserves, and has been continuously building up defense against any sort of untoward risk on the currency side. And that is why we have seen that the policy rate have been very, I mean, I would not say high I should not say, right? Policy rates have not come down substantially, even with inflation coming down, because RBI has kept a real rate kind of regime, wherein the risk to currency becomes very low, because once a country has high real rates, it's very difficult for currency to depreciate in an inorderly fashion from that perspective. It is long.
No, it's too long. I think we need to shorten this, right?
Yeah.
Actually, I would suggest simplify this page, just like what I made to you yesterday. The main purpose of this page is actually to help the clients understand we got the India has got improvement in this area, except currencies, right?
Just a moment.
Yeah. Maybe for the wherever you talk about this slide, you have to give the clients the confidence about the fundamental of India economy, and we leave the currency issue behind it.
Yeah, so Wallace, can we just rephrase this by saying that the macro fundamentals of India have been very strong, be it current account deficit, fiscal deficit, or even inflation. We've seen that there has been substantial improvement in all these indicators over the last 4 years. But one thing that has recently, currency has been impacted, and why we will talk about this over the next few slides.
Okay, that makes sense. Thank you.
But see, since Wallace, the point was like even in 2013, in 2013, start of 2014, currency was at 65, 66 levels only.
Yeah.
So in the last 4.5 years, we have hardly seen any depreciation.
That you will talk in that currency slide.
Yeah, exactly. Yeah. So you want me to remove that because that's a decent.
No. So here you just stick to what is there in this, and then, for example, everything has seen improvement here. Then you have separate slides. So you can talk why it has come down, and then within currency you can say you have to go.
Yeah, exactly. So what I'll do is all the parameters that I discussed individually on this slide.
Okay.
I will not discuss them in detail on this slide. I'll just mention that CPI has improved, fiscal deficit has continuously come down, and CAD has also improved. And then when the slide on CPI comes, I'll explain what government has done, why CPI has come down. Is that okay?
Can we get the consequences for this page? Because based on our investment team, we think the currency issue is the result of the market volatility across the global. I'm not sure. Do you agree with this point? Because if we can get the consequences about this issue, we can just leave the currency issue independent. We can leave the currency issue to global monetary flows.
Okay. Okay, so I'll remove the currency row from this slide.
Okay.
这一张是他要改的，
不用，直接用他所不讲马上改掉而已。
Because we have already printed and all that.
他这张就讲
Okay.
没有 currency， 其他还是
就嘴巴
currency 能够到后面。
Just a minute.
OK。
他的 slide 比较多哦，很多。
22页。
对，但是都是早上。对。
Hi.
Hello?
Hi.
Yeah, hi. So in this slide, we just say that all the macro fundamentals of India are strong and everything has come down and it is at comfortable levels, except for currency, which we will speak about over the next few slides.
Yes.
Okay?
Yes, that would be great. Thank you.
Okay, thank you. So as I said, the CPI has, on the next slide, as I said, the CPI has continuously come down and is now well within the RBI range of 4 plus minus 2%. In fact, rather than breaching on the higher side, it has breached on the lower side once in 2017. But since RBI being a very I would not say hawkish because that will be. RBI has been prudent in terms of cutting rates and has not cut much in 2017 cycle for macros to be stable. And they are considering that they are looking at more long-term picture where they believe that countries' macros are much more important than small business cycles that a country sees in between.
Mm.
And on CPI, government's food management policy has been fantastic. They have managed the food stocks in the country in a very efficient manner and have not let food inflation go up in any of the 4 years, any of the 4 past years where they have been in power.
Mm-hmm. Okay.
And this go on the next slide. On the fiscal consolidation, the government resolve has been tested time and again, but the government has been very efficient in managing their fiscal, and they have continuously brought the fiscal down to 3.3%, which gives ample credit opportunities for the private sector to start investing and build much more efficient infrastructure in the country. Government has taken a lot of steps in terms of revenue management, with GST being the primary one of them, and we are seeing in this fiscal the fruits of GST, where the average collection has been close to 1 trillion INR, which was somewhere close to 80 to 85 billion, 800 to 850 billion INR in the last fiscal. So the revenue management is also bearing fruit in this fiscal, and we believe that this fiscal consolidation is going to
它
continue
里面都没有数字，
in this regime till
它是
2019.
几个数字就一堆，
对啊，
而它就走。OK，
Okay.
Okay. It's sensitivity to group. I want this side to focus.
这样子。
23rd should be 22.
Oh, Wallace?
Hi.
Hi. Any, you know what, this Brent crude price slide has to come after the next slide. So you just need to swap the two slides. Is that possible?
You mean make these 4 pages more shorter or
No.
specific.
交换。
oh you mean
I will email you later.
exchange the
I
orders?
will email you one. Yeah, I'll email.
Basically, current account deficit
嗯。
2跟23页交
India
Oh.
is now very comfortable. We are within the range of 1 to 1 to 2%,
Oh,
which is considered.
okay, that makes sense. Okay, it'll be great. It's more consistent.
Yeah.
Yeah. Okay, thank
Yeah.
you.
So current account deficit is also quite benign, and current account deficit actually had reached 0.5% of GDP, which was much more healthy than it was in 2014-15 cycle. But since then I want to so, but it has deteriorated about 1 percentage point in 2018 because of sensitivity to Brent crude prices, because India is primarily a crude importing nation, and the large amount of import bill is because of Brent crude. And we have seen that the Brent crude prices have shot up from about $30 a barrel to about 78, 79 as we speak. And due to this, the current account has taken a hit, and we believe that that is one risk factor which emanates from higher oil prices. Because if oil continues to go higher, we might see some deterioration on the current account, but still we believe that it is not likely to breach 2.5%, which will not, which is considered to be a benign kind of current account deficit for an emerging market, which is having a lot of influence in the region and which has a lot of infrastructure requirements. So, anything else? So, you don't want me to make it very technical and speak about how much CAD will deteriorate if $10
No, I
goes
will
higher.
say. So you will say this. So India imports more than 80% of its oil.
So that all I'll
Just
say.
do it.
But, yeah. But will it become too complicated?
नहीं they understand. इतना आप बोल सकते हो. So you can start by saying that India imports more than 80% of the oil requirements, and every $10 increase in crude oil price leads to $15 billion rise in import bill, and this is what has impacted the current account deficit.
So that's what. So yeah. Anything else?
Hi, Anuji. Hi.
Yeah. Right.
I just want to clarify the purpose of this page. Even though we understand the crude price will change the currency, the current account for India, but if you cannot predict the specific price of the crude, it'll be much better we just focus our energy on what we do if the crude price got volatile.
So basically, the idea was to highlight a risk that is associated with investing if at all oil price goes higher from here.
Will you have a prediction for this crude price?
Yeah. No, we do not have a prediction on this that it is going to stay here or go down lower or anything like that. And I'm not going to speak on any prediction or.
So Wallace, we don't have a prediction, but what we typically say is that for a country like India, crude oil prices between 30 to 60, 65 is considered good, and anything above 80 is slightly worrisome.
So if the crude price is over 80, is that uncomfortable for you?
Yes, it gets uncomfortable because then it results in macro imbalances, like inflation goes up, current account deficit goes up, which is not good for the bond market.
Okay.
Yeah.
Okay. Please give us a second. Please give us a second, okay?
Okay.
Okay, thank you.
Yeah. We can move on to the next slide.
如果他讲到这页说油价在80块以上不舒服，会不会让人家觉得那
会啊，
现在已经不舒服，
So
那你
after getting done with the macro environment, I'll talk about the market sentiment, which is how much foreign ownership is there in the market, and why the vulnerability in Indian bond market vis-a-vis other emerging
还是不
markets.
要。
If there are any widespread outflows that happen because of dollar strengthening in the world or dollar yields going up, India is relatively
亲戚蛮多问
much
题。
less impacted when in any such untoward incident if it happens at all. If you see India's foreign ownership is measly 4%, which is very low in terms of if you compare it with other emerging markets or with other countries in the region. Indonesia is around 40%, Malaysia 30%, Russia is around 35%, which poses them a risk of any dollar strengthening that happens in the world. There are going to be outflows from those countries which are going to impact their bond markets much more severely than it is going to impact India's bond market. So this is one positive we are speaking on the foreign ownership in the Indian bond market.
Okay. 他听不到。Okay, please continue.
Now, on the next slide, foreign participation has been gradually permitted in India, and now earlier the foreign participation used to come with a lot of caveats like they could not invest in any bond which is below the residual maturity of 3 years. But now, since RBI has come with new regulations where they can invest even in 3 months, 6 months, 1 year T-bills. So the flexibility to foreign investors on which part of the curve they want to invest in India and how the portfolio construction can be done by the fund manager is much more flexible. It's much more rewarding for the investor now, because according to the view, the duration of the fund can be managed much more effectively, and you can play various carry strategies, rollover strategies, which are much more rewarding for the investors.
那些数字是吧？
Wallace, are you okay with this one?
Can you repeat this page again, because we cannot get the meaning of the numbers.
Oh, okay. So I'll just tell you, the message on this page is that Indian mod market has been gradually opened up to foreign investors.
Yeah.
So in 2008, as you would see, the participation was very low, and as we speak, only $100 billion of the total bond market is owned by foreigners. So the government they have consciously taken this call because they don't want too much volatility because of foreigners moving in and out. Till now, there was a restriction that foreign investors cannot invest in papers that have residual maturity greater than 3 years. Now that restriction has been removed. So they have made the market much more liberal, thereby enabling foreign portfolio investors to invest even in shorter end of the curve. We think this is a very big positive, even for the funds that we manage, because in case of a rising interest rate scenario, we will be able to participate in papers that have maturity lower than 1 year.
Basically, you can effectively capture the carry on the shorter end of the curve with this kind of relaxation in rules coming from.
Okay, so the number, each number on the bar chart means that the foreign participation rate of each categories, right?
Yes, for each category, GSEC, corporate bonds, and state development loans.
Mm-hmm.
So right now, the total that they can buy is $55 billion in GSEC, $51 billion in corporate bonds, and $5 billion in state development loans.
Oh.
That's the amount. The unit is amount.
Okay, so we have to write $1 billion somewhere here.
We can put that.
Yeah.
Wallace, just put USD billion on that slide maybe, because that's what's me through there. It may be behind somewhere. I think it's hidden.
你们觉得嘞？我是对这页还
把它的那个数字是金额嘛，是美金嘛？
US dollar billion, right?
The unit of this number is US dollar billion, right?
Yes.
Yeah.
Yes.
Okay.
Okay, no problem. Okay, thank you. We can continue.
Yes.
So after this, we want to highlight that foreign investors have been actively participating in the Indian bond market for about after the global financial crisis, and it has continuously gone up. Only in the year 2013, when there was a widespread risk-off in the world, there was outflows from the Indian bond market. And in 2016, again, when the Chinese yuan depreciation happened, we have seen outflows in India. Apart from that, in all the years, we have seen continuous inflows into the Indian bond market, and the foreign participation has continuously improved, giving much more depth, much more liquidity in the market, which is a big positive for investors coming into India.
Okay.
Please wait a moment, please. 灰的是政府债嘛，对不对？然后这是公司债。
G6 还是政府债？
G6 是政府债，灰的是政府债。
地方政府债是 state development。
对啊，
灰的是政府债啊。
对啊，是公债。
不是，这个是地方政府债，这个才是公债。
不可能啊。
没有吧？它上面有灰的。
灰的是不？
灰的是
这灰的就是后面这个。
啊，这个灰的。
对，
这个
因为
橘色。
它那边也是，就是它原本时代也是画 错，
对，所以是怎样？
所以我刚刚是确认，就是第一个这个就是上面绿色这个。
这是公债，不可能的。
这是公债，这个是公债。
对啊。
不大确定啊。Sorry, we have one question about page 25. For example, 2018, 55, which means government bond or what kind of bond? 55.
Sorry?
55 is government bond.
Government bond.
Government bond.
And 51, let's
Government of India bonds.
51 means corporate bond, right?
Correct.
And the green one is state development loans.
Yes. That's like, so India has about 29 states
Oh.
and counties. So these
Okay.
bonds are issued by each of those counties.
Okay, so okay. We just mix the colors together.
Oh, okay.
Mm.
Yeah. So we move on.
Okay.
Let's go to 26.
So slide number 27.
27.
Yeah. Yeah. So in this slide, just to give perspective of why Indian yields have moved up of late.
Mm.
It's because generally India has gone through a very volatile period in past 6 to 9 months due to oil moving up significantly higher, which has put pressure on the currency, and along with that we have seen US yields also inching up, and they touched a high of 3.15%, which has caused a lot of SBI to take money out of India, and this has caused a bit of volatility in the Indian market, and Indian yields have pushed up because of that. But because it has primarily happened because of things happening outside India, there is no deterioration in domestic macros. We believe it presents a fantastic opportunity for investors to come in. We believe that this is a very good entry point for the Indian bond market. 8% kind of yields with 4.5 handle inflation expected to be in next 6 months to 1 year presents a very good opportunity for investors to be in India.
Mm. Okay. Okay.
Moving on to slide number 28
Yes.
is the Indian. So adding on to why India bond market is at a very good entry point and why Indian bonds look really attractive to us right now is because the impact on rates has been much higher on the Indian bond market due to oil moving up higher than other emerging markets. So this has put India in a state where bond market is very difficult. It's very difficult for interest rates to move up from here because we have already touched 8, 10 kind of levels, which are extremely attractive in the present scenario unless oil moves significantly higher to $85, $90 a barrel.
Anuj, sorry to interrupt. Because in your previous slide, actually in the beginning of this slide, we just tell our clients the positive element of India fixed income market. But if we address this slide in this way, just like it's a perfect time for clients to get involved with India fixed income market, because the yield movement is the third worst during the past year.
Yeah.
How we get balance for this message?
Sure. So how we will rephrase it that over the last 1 year, bond been very volatile. So even India has been impacted by that. And it is the third worst performing bond market among the emerging market segment. So yields have gone up by 142 bips.
Yes.
And we think this is a very good
Entry point.
Entry
Yeah,
point,
that's the message we want to give.
Wallace, is that okay?
Uh,
After Turkey and Philippines, it's India, whose yields have gone up by 142 bips. We think the downside from here
yeah, we can get
is
this.
much lower.
We can get this point, but my question is if the India bond is much better than other emerging local bond fund, local fixed income assets, why India still got the third worst one during the past year?
That is because of oil prices. Wallace, that is primarily because of oil prices. That is why we put a slide of risk to investing in India before this. Because if oil, the major problem is if oil shoots up like this, then the threat to Indian bond market is much higher than other games. So that is one risk that is precisely why we have put in the slide for sensitivity to oil, because that we can't escape.
Okay, but how to persuade the clients to support our view towards this?
So that's exactly why. So if oil has gone up, the yields have gone up also sharply, right? So in terms of pricing in the negatives, the market has priced in a lot of negatives. That is the message that we want to give.
Okay, please give us a second to have an internal discussion, okay?
Yeah, sure.
Okay, thank you. 这页会不会比较难跟人家
他意思是说一下子上扬很多啊。
他的意思是说现在是好买点，因为它上扬很多，
对啊
可是
那有其他更多的。
对呀，我
对
就在想说，那前面那两个，那我
对啊，而且你之前又说它很好，比其他的好嘛，现在变成它，我不知道这样讲。
有些人有疑虑的，才会请他先拿掉。这很难讲。
对，因为它会跟前面的冲突啊。我如果说它 fundamental 什么什么都比巴西、土耳其其他好，但是我也只
一有上升的快，
但我一有上升快就说不过去了。
除非你有请他解释也有上次
对
的一个，
但是说是有价嘛？
对
对啊，可是
油价会不会继续上升？会，
他
所以这个
对，然后
会继续扩
这有但
大
是说他刚说，除非油价上升到80块以上，那这个也没人说得准。
那你要建议他，我觉得你可以决定啊。
不然你就要变成
因为关键是你要
熬回来。
怎么讲。
对呀，就有点难，
有点难。
就是要花很多口舌去把它熬回来。
对，还会有很多人忘记。
那干脆不要讲这一页好了。
对，我觉得这页不要，你留前面那页好了。
对啊，一样是
那
讲一样。
虽然前面那个
建议一下好吗
前面那页也没有，会看到一路上升，你也不知道会不会再上，可至少感觉比这页好讲。
Sorry, we got a conclusion that we want to omit 28, page 28. We don't want to reprint this page. Could we?
Do you want to remove the page?
Yes, remove 28. It's hard to reprint, yeah.
Okay.
Okay, so you can remove that page.
Yes, thank you.
Yeah, the main reason is it's difficult to explain to clients. If we tell them India fixed income asset is much better than other emerging market bond fund, but it's very difficult to explain why India bond still got the third worst one in the past 1 year. I know it related to crude price, but it will lead our clients to mapping or picture what's the consequences of crude price. That's very difficult for us.
They will ask
No
more.
worries, you can remove that page.
Okay, thank you.
就顺便把它的再删个几页掉。
你可以讲啊。
So how do you suggest we make the point that it's a good entry level?
Sorry.
You can make your point of this kind of good entry level when you explain the page 27, and then we take out the page 28.
Okay, just a minute.
好，没讲很久。
因为还有很多题。
所以前面那个下
Sorry, are you talking about the chart on page 27?
Hi, Anuj and Rahi. We also want to make another suggestion to remove the original slide page 22 because it's also related to group price. Okay, so you don't need to the sensitivity to grant group price.
Why do we remove this, Wallace?
Okay, the reason why we suggest to remove this one is because the crude price is already over 80, right? And
Yes.
if it's already over 80, it's uncomfortable for India current account, specifically. So if we just deliver this message to clients, they must ask you, would you give them the prediction of group price? This is not what we want to educate our clients because it's very difficult to explain and prevent the potential risk.
Okay, just a minute.
Okay, thank you.
Okay, I don't have.
Okay.
That's fine, but so.
We can leave this to Q&A section, but if we just raise this issue in your presentation, the clients might get confused.
Okay, do we want to highlight the risk of oil prices or no?
Do you have any prediction?
No,
no.
they don't make
don't.
any prediction.
So how do we avoid such kind of risk?
But actually, it's very difficult for us to avoid this issue.
Yeah, so just keep this issue.
How about we just keep this issue and make it more simplified? Like.
No, I'm fine with removing 22, but then in page, then on page 20.
Wallace, may you, Connie, actually I get the point from where you're coming. What is happening currently in the slides is that there is too much emphasis placed on oil prices. So if we remove this slide and then we'll just have in one or two places where we will speak about the risk of oil price. So to that extent, the overall presentation will tone down.
So we can only discuss about oil price on page number 29.
Yeah.
Where it's shown that why Indian bond market has been volatile in past 6 to 9 months.
Oh, okay, that would be great.
Oil has.
Yeah, that would be great. We use page 29 to replace the previous two pages.
Reflected why bond market has been volatile and link it up with the chart, which is the Indian 10-year, which is at a high level right now.
Yeah.
Okay. Yeah,
Does that sound good?
it's okay for 你们觉得呢？
Yeah.
我觉得这样比较好。
Mm.
Okay, that would be great. Thank you.
And again on page 29, do you want the right hand corner low where it talks about FII outflows in 2018?
你觉得嘞？It's a tough call.
你看他现在讲什么？
他说如果他在讲到29页的时候，我们因为29页
हटा तो हटा देंगे ना फिर।
उन्होंने तो बहुत मंदी वाले ऑयल वाले बहुत सारे साइड से बहुत मंदी लिखी है।
तो बोल देंगे ना कि इसी में कारण से हुआ है।
因为他这边跟油价讲到有关的，这个跟这个。那我觉得这可以讲，因为这是已经发生的事了。
那他只是在讲现在油价上涨了了解，没有任何 comment 啊。
OK，不要他们就好。
就是
前面都没有的话就只是
就是陈述事实，但是不要再继续探究它这样子，不要探究它。
啊你讲事实，那又是不利的事实，那为什么要讲？
但是人家已经知道了。
就，现在是怎么搞
？OK， 他们还在线上，你就直接讲就好。
静音。
Hi, Anish.
Yeah.
Hi, I think page 29 is okay for you because it's reality and all the numbers in this page are already happened. So it's quite okay for our clients, but we don't suggest you to give further information
I
about
don't
the.
talk about it much, but let it remain on the page. That's all.
Yeah, Wallace, we have the same view. I think we should keep this saying that foreign participation has been very strong in 2017, but because of the current volatility, we have seen foreigners moving out. So there has been outflow of $4.5 billion in 2018.
Oh, okay.
Yeah.
Okay.
Okay, then we come, I don't know if this slide is also not okay with that. Currency
So moving on to the next slide, slide number 30.
So
Sure,
this is
sure.
also a slide on relative performance, but absolute performance is negative, Wallace. So I'm not sure if that is also.
Actually.
So Wallace, the message that we want to give out in this slide is that the house view of ICICI is that
Wallace, we believe that since we are a current account deficit country and our inflation differential with US is going to be 2 to 3% on a stable basis, we here at ICICI believe that there is going to be dollar rupee depreciation of about 2 to 3% every year. And because of that, the currency returns also reflect that from 14 to 17 we have exactly depreciated about 2.5% with USD.
Okay. 我觉得这可以啊，这是他们的
This kind of depreciation we expect from our currency. And how we plan to use it to our advantage is where we use our hedging capabilities, which we are exploring in the later slides. We are telling that how we plan to tactically put hedges and try to improve the performance of the fund through tactical hedges so that we do not lose the carry, and also we protect the investors from any kind of outlandish INR depreciations.
Okay. It's okay. It's okay.
If you want, I can explain why we expect 2 to 3% depreciation in INR every year.
Would you say that again?
I'm saying if you want me, I can explain why we expect 2 to 3% depreciation in INR every year.
Oh, 你们觉得呢？
I think we can leave this explanation into QA session if there's a question raised.
Okay, got
Yeah,
it.
don't explain too much detail about this kind of prediction.
Sure. So Connie, in this slide, can we just say that our house view is that INR should depreciate 2 to 3% every year? But if you see from 2014 to 2017, as per our view, the depreciation should have been 8%, but the actual depreciation was just 3%. And in the last 1 year, you see that the INR has depreciated 6%. This is because of high crude prices. But we are using hedging techniques to protect the portfolio from such depreciation, which we will talk about in the next slide.
Okay.
Yeah.
Okay.
So how the risk management framework for currency, how we try to protect our clients from INR depreciation is we use in-house model which which uses economic fundamentals of India vis-a-vis other countries, and also uses technicals like volatility and other seasonalities that are involved with currencies to come up with a model where we are able to predict, or we try to predict and tactically put hedges so that the fund is able to glide through any kind of currency depreciation without losing any carry. Because since I again put emphasis on carry here, because putting a hedge on a high currency like India involves paying very high cost.
Mm-hmm.
So what happens is that if we put a hedge throughout the year, that means that we are losing on huge carry on Indian bonds. So what we do is we put tactical hedges, we put for shorter time frames, we put them and we remove them quickly so that we do not lose on carry.
Okay, understood.
Yeah. So, are you getting into the mechanics of it, or should we leave it at that?
We can leave that. I think the explanation for now is okay.
Okay. The next slide is on the trade tensions that are going around in the world and how India is the least susceptible in terms of its dependence on the export market. Because India is a primarily domestic economy with $2.4 trillion of GDP, our export constitute of about 300 billion only. And to US even lesser, which is about $45 billion. So the susceptibility of Indian growth story and India currency to any kind of global trade tension is much less than other trade partners of US.
Hi, I'm wondering, because the notes of this page doesn't match to the content you provide, is anything wrong?
So I don't know if these notes have nothing to do with the page. Sorry, I don't know where this has come from.
Okay. Okay, but it's easier for us to explain. Okay, it's okay for us.
I apologize for it, but I don't know where this has come from.
Wallace, we will change the notes and give it to you.
Okay. Actually, we can understand the point of this. Okay.
So you will modify the notes, right?
Yes.
Okay. So today we will get your revised one, or which day?
Yes.
Today.
Today.
Okay, thank you.
Yeah.
来不及，飞机上学。
对，已经礼拜五了。
明天晚上到。
那你要把我弄进 loop 啊，要不然我都要靠你们转。
好。
Moving on to the slide number 33, the real interest rates in India are extremely attractive and they remain very high. Now, higher real rates provide cushion to the investors against any shock depreciation, any shock appreciation in dollars in the global economy, and there is going to be significant upside on rates to be made here, because if your real rates are high, even if a central bank tries to lift up rates, overnight rates, the spread between a 10-year bond and the overnight rate compresses. So what happens is that the cushion that a bond, cushion that 10-year point has against any rates going up in the short end of the curve is much higher. So what happens is if real rates of a country are high, there are two benefits of it from a foreign perspective, for a foreign investor perspective. One, the currency depreciation is much less as vis-a-vis other currencies because inflation is always kept under check.
Okay. Okay.
So now you can again say that why currency has depreciated if real rates were high, but then again I'm going to give you the same answer that it's going to be oil.
Oh.
So I don't know how we plan to.
It's okay if the real interest rate could cover the capital loss of currency. That will be fine to explain to clients.
Yeah, is that okay? Because
It's okay. It's okay.
the question arises that why did the currency go up if this is the case?
It's okay. Actually, we'll encourage our clients to invest this as a long-term investment. If we just take it in for long-term investment, we could reduce the impact from currency.
Precisely, yeah.
Okay.
The next slide is the spread differential between India and US. We have seen that US 10-year yields have gone up significantly over the past 1 year, from about 2% to about 280, 290 as we speak. And this US 10-year yield is to go higher from here, Indian yields provide a lot of cushion to the investors because the spread between India and US 10-year is close to 500 basis points right now, which is historically without any crisis situation at the highest point. Because the rest of the rest of the occasions when the spread has gone higher than 500 basis points, it has generally been a crisis in the world. In a no crisis scenario, this is the highest spread that we have seen in historically between India 10-year and US 10-year.
Okay. Okay.
So, valuations extremely attractive. The spread between 10-year yield and repo rate is much higher than average. Again, this is at the highest point without any crisis. In a normal functioning economy, the spread has never been this high, and this also provides a lot of cushion to the investors and should provide comfort for investors to come in and invest even in 3 to 7 year bond kind of space.
Okay. Okay, in summary page, would you see what I made for you yesterday?
Yeah.
But there is Chinese, right?
Yeah. So, Wallace, can Anuj conclude at the valuation and then Connie can make a brief?
Yes, of course. Yes, of course. Actually, because we got the Chinese version for our clients, so even though the content still keep the same, but the content can put it in different way.
Yeah. So, Connie, if you have any questions on the summary slide, you let us know.
Okay, please just make me explain to Connie for a second. 我就是把它这6点用积极管理风险跟积极创造机会把它分开来，这样他们就不会看到一堆字。
对。
好，所以管理风险我用绿色给它呈现，有4点。
所以你把它改了这一页是吗？
对，这页内容我没有改，
对，
文字我都没有改，
对
我只把它分成2类，一类是管理，一类是机会。
写在另外一页。
我是做在中文版上面。
我想说没看到。
那你这个油价还是有写吗？
油价我有写，那我就把它拿掉好了。
对啊，那这是65，
好，
对啊，65块。
好 ，OK。Hi Anuj.
Hi.
Yeah. Hi. In summary page, and we also want to suggest you could remove the sentence of the oil price. Yeah, because you said you said right. We are
already above.
over this price.
Yeah. Okay. Thanks. We'll do that.
Okay.
Yeah. So is Connie going to present the summary page?
No, we no need to do so. We can average the material for a summary page.
Okay. So Connie will do the summary page.
我
Yeah.
吗？我要讲 summary 吗？
你讲 summary。
他的 summary
对
是这一页，就是那个两个 session 的那个。
对对，他讲他的，他讲完之后你就用你的方式去讲。
OK OK 好 OK good。
你有讲10分钟的 summary 了吗？
那是最后。
他的那是另外的基
最后
金的
第三个第三个。
OK，还有什么要理清的？哦，加翻译40分钟。对。40。Yeah. I know because we have more questions towards your slide, so we just spend around almost 40 minutes for rehearse this deck. So we suggest maybe you could make more practice for this and make it shorter and easier.
Okay.
Okay.
Okay, and even next Monday morning, if we got more questions about the deck, the two decks, we can check with you face to face.
Sure, Wallace.
Sure.
So Wallace, to conclude, I'm going to send you revised notes for the page on roads, which is slide number 10. I will also send you the revised notes for smart city, difference between traditional and smart city. And then we remove the slide on oil, which
Yeah.
is slide number 22.
Yes.
Okay.
Yes.
On slide number 25, we put USD billion on the top.
Yes.
That's not appearing.
Hmm.
Okay, then we remove the slide on yield movement, which is on slide number 28.
Yeah, remove 28. Yeah.
Yeah, we change the notes for slide number 32, which talks about trade wars.
32. Okay. Exactly. Yeah.
And in the summary page, we remove the line on oil prices.
Yes. Please. Thank you.
Okay, I will send you the revised question.
Okay. Thank you. Thank you both.
拜这边。
Yeah.
Thank you. Bye bye.
Bye bye.